Hello, welcome back. I am Sage and you are watching 𝐊𝐴𝐿 TV live from Sydney. And this is the Economic Corner show where we update you on all the biggest global economic announcements. And first up on the Economic Corner is an update from the United States. President Joe Biden will unveil a $6 trillion White House annual budget today that incorporates sweeping plans for large-scale developments in the government investments. The White House sees salary increases as a solution to the current misalignments in the labour market, and President Joe Biden has asked corporate America to raise wages. Rising inflation and supply chain hurdles are seen as major concern areas on the road to US economic recovery, and Biden believes that there is an ample room to raise workers' pay without raising customer prices. Biden also suggested the White House would take additional action soon to try to relieve some of the supply chain struggles that were driving up prices amid soaring demand, starting with the construction materials and transportation bottlenecks. And meanwhile, Treasury Secretary Yellen said that as the US gets back to pre-pandemic full employment, it will be appropriate for interest rates to rise above current rock bottom levels. And according to Yellen, the debt to GDP ratio is expected to surpass 100%, while US interest burden will be manageable. And according to her, it is critically important to have responsible fiscal policy, and the core responsibility for inflation control is with the Fed. Next up, we have updates from the pandemic recovery phase. China shows us a drug company, Sinopharm, published its trial results showing efficacy rates well above 50%, but with little data on vulnerable groups. And Thailand's Public Health Ministry reported 3,323 new infections and 47 COVID-19 deaths on Thursday morning. And meanwhile, the UK Health Secretary Matt Hancock said as many as 3/4 of all new coronavirus infections across the UK involved the variant first identified in India. On the other hand, the coronavirus infection rate has declined in Europe as the region looks ahead to a summer with increased travel and a relaxation of restrictions. The number of new coronavirus infections in the EU fell to an average of 7.6 cases per every 100,000 residents by May 26th. And lastly, this pleasing news is going to catch your attention for sure. California has announced $116.5 million in vaccine lottery prize money. Governor Gavin announced a state vaccine lottery in the US with more than $116 million in cash prizes for vaccinated Californians in an effort to encourage more residents to sign up for a jab. And starting today, the next 2 million residents who get fully vaccinated will receive $50 incentive cards, and that these are prepaid and can be used on groceries. Next month, cash prizes of $50,000 will be awarded to 30 winners in 2 draws to be held on the 4th of June and the 11th of June. The main event, though, is on June the 15th with 10 cash prizes of $1.5 million. Californians who were vaccinated in earlier months will be automatically entered into these draws. Moving on now to some important economic data numbers. Japan's unemployment rate crept up and job availability slid in April, underscoring the pain that the country's prolonged battle with COVID-19 is inflicting on the economy. And separate data showed core consumer prices in Tokyo fell in May, reinforcing expectations that inflation will remain well below the central bank's 2% target for the time being. The government is looking to extend a state of emergency combating the pandemic by about 3 weeks to June 20th, clouding the outlook for the fragile recovery. Japan's jobless rate rose to 2.8% in April, up from 2.6%. And meanwhile, the core consumer prices in Tokyo, considered a leading indicator of nationwide figures, fell 0.2% in May from a year earlier. The expected extension of state of emergency curbs to combat COVID-19 heightens the chance the Bank of Japan will push back the current September deadline for a package of measures to cushion the economic blow from the health crisis. And now, before I share some big breaking news from the biggest economies in the world, it's time for a small break, so please stay tuned to not miss the latest trending news.
At 𝐊𝐿𝐼𝐴 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐼𝐴 TV.
Hi, welcome back. I'm Sage and you are watching 𝐊𝐼𝐴 TV live from the Sydney studio. And this is the Economic Corner Show. And meanwhile, the pending home sales took a step backward in April, according to the National Association of Realtors. All 4 US regions recorded year-over-year increases, but only the Midwest witnessed month-over-month gains in terms of pending home sales contract transactions. Pending home sales decreased 4.4% in April from the prime month, in part due to record low inventory of homes for sale in the first quarter of 2021. Pending sales dropped month over month in all US regions except the Midwest. And year over year, however, pending home sales are up double digits in all regions. The Pending Home Sales Index, a forward-looking indicator of home sales based on contract signings, fell 4.4% to 106.2 in April. Year-over-year signings jumped 51.7% as last year's pandemic-related shutdowns slumped sales to an all-time low. An index of 100 is equal to the level of contract activity in 2001. And on the other hand, non-farm payroll employment disappointed in April, increasing just 266,000, well below consensus expectations of nearly 1 million new jobs. According to the Federal Reserve Bank of Dallas, with payroll employment remaining well below its prior peak, slow job growth would typically suggest weak demand for labour from firms and limited employment opportunities for the job seekers. Current conditions in the labour market, however, may be far from typical. There are several reasons why previously employed individuals may not currently be actively looking for work or are searching with low intensity. And these reasons might include lingering health concerns, working mothers staying home to care for children, perhaps reflecting a lack of accessible childcare options, generous unemployment insurance benefits, and decisions to retire or prioritise other activities. The signals coming from wages are consistent with those coming from alternative measures of labour market tightness. And according to the Employment Cost Index, which adjusts for composition effects, wages increased 2.7% for the 12 months ended March 2021. This is only slightly below the pace of wage growth in 2019 and much stronger than during the slack labour market conditions that existed during the aftermath of the Great Recession. Since February 2020, the economy-wide employment to population ratio has declined by 3.2 percentage points, or by about 8.5 million workers. About 1.6 percentage points, or 4.1 million people of the decline, consists of unemployed workers who will likely eventually return to employment. And now, before I share some big breaking news from the biggest economies in the world, it is time for another small break. But please stay tuned to not miss the latest trending news.
At 𝐊𝐿𝐴N TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐿𝐴N TV.
Hi, welcome back. I'm Sage and you are watching 𝐊𝐴N TV live from the Sydney studio, and this is the Economic Corner Show. Next up is the GDP numbers. Real gross domestic product, or GDP, increased at an annual rate of 6.4% in the first quarter of 2021, according to the second estimate released by the Bureau of Economic Analysis. In the fourth quarter of 2020, real GDP increased 4.3%. The GDP estimate released today is based on more complete source data than were available for the advance estimate issued last month. In the advance estimate, the increase in the real GDP was also 6.4%. Upward revisions to consumer spending and non-residential fixed investment were offset by downward revisions to exports and private inventory investment. Imports, which are a subtraction in the calculation of GDP, were revised up, and the increase in the first quarter GDP reflected the continued economic recovery, reopening of establishments, and continued government response related to the COVID-19 pandemic. In the first quarter, government assistance payments, such as direct economic impact payments, expanded unemployment benefits and paycheck protection program loans were distributed to households and businesses through the Coronavirus Response and Relief Supplemental Appropriations Act and the American Rescue Plan Act. The real gross domestic income, or GDI, increased 6.8% in the first quarter, compared with an increase of 19.4% revised in the fourth quarter. The average of real GDP and real GDI, a supplemental measure of US economic activity that equally weights GDP and GDI, increased 6.6% in the first quarter, compared with an increase of 11.6% revised in the fourth quarter. Profits from the current production, corporate profits with inventory valuation and capital consumption adjustments, decreased $0.2 billion in the first quarter, compared with a decrease of $31.4 billion in the fourth quarter. And profits of domestic financial corporations decreased $3.6 billion in the first quarter, in contrast to an increase of $17.5 billion in the fourth quarter. So profits of domestic non-financial corporations increased $12.4 billion, in contrast to a decrease of $48.2 billion. Rest of the world profits decreased $9 billion, compared with a decrease of $0.7 billion. In the first quarter, receipts increased $31 billion and payments increased $40 billion. And now, before I share some of the big breaking news from the biggest economies in the world, it is time for another small break, but please don't move a muscle as I'll be back to read to you the trending news to follow.
At 𝐊𝐿𝐴N TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐿𝐴N TV.
Thanks for joining us yet again. This is Sage. You are watching 𝐊𝐴N TV live from the Sydney studio this afternoon, and this is the Economic Corner Show. So the US jobs market edged closer to its pre-pandemic self last week as initial jobless claims totaled just 406,000 for the week ended May 22nd, and the Labor Department reported Thursday. While that level is still well above the norm before COVID-19 struck last March, it is the closest to the previous trend since the crisis began, and a decline from the previous week's 444,000. The advance figure for seasonally adjusted initial claims was 406,000, a decrease of 38,000 from the previous week's unrevised level of 444,000. And this is the lowest level for initial claims since March 14, 2020, when it was 256,000. The 4-week moving average was 458,750, a decrease of 46,000 from the previous week's unrevised average. And this is the lowest level for this average since March 14th of 2020, when it was 225,500. The advanced seasonally adjusted insured unemployment rate was 2.6% for the week ending May 15th, a decrease of 0.1 percentage point from the previous week's unrevised rate. The advance number for seasonally adjusted insured unemployment during the week ending May 15th was 3,642,000, a decrease of 96,000 from the previous week's revised level. And lastly, in today's economic report, let's see why the WHO is saying that the African continent needs 20 million vaccine jabs urgently. COVID-19 vaccination campaigns across Africa are facing significant delays because of Oxford AstraZeneca's COVID-19 vaccine export ban imposed by India as the country grapples with the rapidly spreading strains of coronavirus. Oxford AstraZeneca's vaccine, manufactured by the Serum Institute of India, was an integral part of the COVAX initiative to distribute vaccines to low and middle income countries. And several African nations have already administered all the vaccine doses they have received so far, and now anticipating new deliveries to administer the second shot to the people. Due to the ban, the countries are short of doses and thus might be unable to administer the second jab. And on the 27th of May 2021, the World Health Organization Africa released a statement highlighting that Africa needs at least 20 million Oxford AstraZeneca vaccine doses in the last 6 weeks. The continent requires additional doses to get the second jab to people within the 8 to 12 week gap after the first dose. In addition to this urgent requirement, 200 million doses of any WHO emergency use listed vaccine are needed so that 10% of its population can be immunised by September 2021. The Global Health Agency also stated that Africa must boost its vaccine manufacturing capacity in the longer term. However, there is no quick fix for this, and the processes, partnerships and putting the policies in place could take several years. WHO is helping the African member states to set the groundwork for building vaccine manufacturing capacity. In addition, the agency also mentioned that the intellectual property or IP waivers are a significant first step, but should also provide expertise and important technologies sharing. The WHO also highlighted that the agency is working diligently with nations to improve the COVID-19 vaccine launch by optimising delivery strategies and increasing uptake. Thank you so much for your time joining us on that report. And that is all from the Economic Corner for today. Being a data-heavy day, please stay tuned for the latest news and the market updates by my colleague Holly, who will be here shortly with the last trade.